Wondering when the best time is to start a business? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And one of the key questions we get asked a lot is, when's the best time to start a business? And actually, from a tax point of view, there's a couple of tips and things we can talk about, but quite often some of the practical considerations are more important. So in this one, we're going to cover both and talk about some pros and cons of when you might or might not want to start a business. So before we get into it, if you like these type of videos, make sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So let's recap first about how the tax year works. So I know this is a little bit of a boring topic, but it's quite important for both limited and sole trader to understand, because when we talk about some of the practicalities, sometimes they link back to this. So sole trader, your year generally starts on the 6th of April one year, goes all the way around and finishes on the 5th of April the following year. Now in the olden days, actually quite currently up till recently, you could have a year that ran outside of that, and it was a really odd way that it was taxed. I'm not going to go into it because it's confusing and it's a mess, but it used to be quite fashionable years ago to have a year end that didn't run with the tax year. These days you nearly always run it with the tax year, and actually right now if you're doing it, you're going to have to run with the tax year because of the new Making Tax digital system that's coming up. There's plenty more videos on the YouTube channel talking about Making Tax digital and those big changes for sole traders. But for now, let's just keep it simple. It's going to be from the 6th of April to the 5th of April, or there's an option to run it from the 1st of April one year to the 31st of March the next. And a lot of people do that because it's easier to keep it calendar monthly. So both those options exist, and that's what you do. Now, if you what that means is from a tax return perspective, regardless of where you start your business, so if you started your business, say, on the 1st of September, your first year as a sole trader is going to be short. You're going to run from the 1st of September to the 5th of April, the 31st of March the following year, and you're going to get taxed. That's what goes on your tax return. Then your next year is going to carry on from either the 1st of April the next year or the 6th of April, depending where you drew the line, and carry on in a full year. So it actually works out quite well. You just end up with a short year if you start, and then your full year afterwards. So that's sole traders. So bear that in mind when we come back to that in a minute. With limited companies, your year doesn't matter. It runs in its own year, basically. And so if you form the company using the September example, normally if you form it in September, you're sort of 12 months. By the time you set up and get going and trading, you might pick it's going to run from the 1st of October all the way around to the 30th of September the following year. Sometimes in the first year, if you incorporated it like on the 15th of September and started trading immediately, you might have a year and a little few days, and there's a way to deal with that, but that can happen in the first year. But then generally from then on, you've got this 12-month period. But it doesn't run in line with any years. So it's just a year when you start and when you get going. And we're going to come back to that one as well. So that's kind of a recap on how the 2 years run. Now let's talk about then practicalities. So when's the best time to start bearing those in mind? Well, actually, it doesn't matter massively. There's a couple of bad times, I would say. One of the bad times is if you're a sole trader, if you're going to start in, say, March, so let's say you're going to do March 23, that's probably the worst time because you're going to end up having to do a tax return for 1 month. And if you're outsourcing that to an accountant, that's money that you're going to have to spend to do it. Or if you're doing it, it's the hassle of doing it all for just 1 month's sake. And if you've got other income like your job or rental income, you've got to gather all this information, put it all in the tax return just for your 1 month. Now, sometimes there could be a good tax reason because you might have made a loss in that 1 month and you want to do something quite clever with that loss. But generally, a lot of people tend to avoid it. They tend to just go, do you know what, I'm just going to wait. I'm going to start trading on the 1st of April. You might buy stuff and everything else in that period, but you're not actually trading. That's okay. There's other videos on this, but you can count that on the first day you start trading anyway. So it's not like you're going to lose out, but you make the decision to start trading into the new tax year. So that's quite a common one, and one to avoid is ending up with that really odd 1 month or 2 month period. The reason it pops up a lot, as you can imagine, is people go, going to start a business in January, and they've got 3 months to put on their tax return. But actually, by the time they got going, they didn't really start going until April anyway, because everything takes a little bit longer than people expect. So just bear that in mind. But there is nothing wrong. It doesn't matter when you start, it will work. But that's just one timing thing to bear in mind. And it's a similar idea with a limited company. Now, a limited company is slightly different because the chances are you're going to need an accountant to help you with it. It's very rare do you see anybody who doesn't have an accountant with a limited company for all the reasons we've covered in other videos, just because of the different filing requirements. And if you imagine you're going to have to pay them for a set of accounts. Now, whether that set of accounts is 3 months or a year is ultimately not going to make any difference, because actually the amount of work is almost the same. There's still all this masses of forms you've got to do and submit to the various different places. So it doesn't really affect the price too much. So if you imagine to get your best investment out of that, you want to kind of start your year close to when you form it. So we tend to say with limited companies, you want to give yourself enough time to be able to form it, get the bank accounts, get insurances, whatever else you might need in place. So you're going to give yourself a few weeks to do that. But what you probably don't want to do is start the company, form the company, and then actually start trading in 10 months' time, because then you might need a set of accounts done and you're not going to get the best sort of bang for your buck out of that investment in that set of accounts. Not always the case, because you can change the year end later with a limited and do some other stuff to help that. But it's just something to bear in mind. Again, it's not a solid don't do it, but it's just something that if you can avoid doing, I think is quite a good thing. Try and form that company near when you're going to get going. But obviously, for practical reasons, you're going to give yourself a little bit of time to kind of get everything in line, get the bank account open, etc. And sometimes from a tax point of view as well, starting a new limited company into a new tax year is quite cool. So let's say you were going to quit your main job, go limited. Your allowances as you as an individual reset with the tax year. The company one doesn't make any difference, but and that's quite important for a tax planning point of view, because it might mean that your reset of allowances allows you to pay some salary that would help reduce the tax bill from the company, or you might change the way you take money from the company. There's lots of options when your tax allowances reset, so it can make planning that a little bit easier. And it's the same as if you were going to go from sole trader to limited. You might find the tax year is a nice place to do it, and a lot of people do try and do that, but ultimately it really doesn't matter. Like if you've decided you want to move to limited to save a lot of tax and it's in September, there's the chances are you want to go and get it done, because every day that you're carrying on is now going to be costing you tax, so you're going to want to do it. But again, it's the same sort of thing. If you're thinking about changing in March, then you might as well just kind of get ready to gear up to start trading in the 1st of April. So like I say, there's some kind of worser times to do it, but there's no like definite don't do it here or do it there. It's just a mix, and there's a few things to think about, but off from a tax point of view. But from a practical point of view is actually more important. So if you're going to start a new business, you're going to have to look at cash. Cash is everything. Cash flow, we've talked about this a lot. One of the things is from experience of doing this for the last sort of 16 years, there's a couple of themes. One is it always takes longer to get customers than you think, and it's always harder usually than thinking. Everything takes longer than you think. So when you're looking at it, you need to make sure you've got enough survival income to be able to survive that period, or enough investment sort of banked to be able to bankroll the company's costs while you get some customers. So that is quite often when you're thinking about when's the best time, and the best time is when you've got the money to do it. So have a think about that. Do plan it out. If you want a template to help you plan that cash, there's a free one on our website. Just Google like Heelan cash flow, and there's a cash flow basics blog, and there's a download there. Download your free spreadsheet. You can just start planning it all out in there. But that's the big one. Have you got enough cash? That can determine it. If you're in an employed job and you're thinking of starting something in a competing industry, quite often you might have something in your contract that prevents you from doing that. So there might be a restriction, so that's worth looking at. And the same if you're thinking of starting a side hustle up, checking your employment contract is a good idea to make sure that there's nothing that restricts you from doing it. So that's quite another practical thing that's important as well, is that. And then of course there's seasons, depending on when your business is busy. So your busiest period might be the Christmas period. So that might sort of dictate to you when you've got to start it. There's no point doing it there might be a point to doing it in January, but then if you've got a lot of costs all the way back up to next Christmas, maybe it's not the best time to do it. So seasonality can affect it as well. So it's like I say, it's those practical things, and also the length of time it's going to take. So like for example, if you're going to start a business that's got an FCA registration or something like that, it's going to take ages. So you're going to need it open. You're going to need to throw these other sort of rules we were talking about out the window, because you're going to need a long time to prepare. So prep time's important. So that can dictate it as well. But for a lot of people doing a service based, let's say you want to be a side hustle graphic designer, you could probably boot the limited company up and get a bank account open within a 2-week period if you're working with the right people, and start invoicing. So you don't need 9 months in advance to boot your limited company up or anything like that. And sole trader is even easier. I mean, sole trader, just get going, and then sort out what you've got to do with the tax. Again, there's loads of videos on the channel talking to you about that. So practicalities really kind of trump the tax, but we have covered some areas where there's some sort of worser times to do it. So I'd say there isn't a best time to do it. I think it's when you're ready, when you're pumped, motivated, got the cash. Those are the bigger things. And then the tax bit is to consider, is now a good time to put these bits of paper in place? If it's March, do I wait till April? If it's limited, do I wait a little bit further before forming the limited? Those kind of things. So there we go. I'd love to hear your thoughts in the comments. If you know somebody who needs to know this information, please do share it, and I'll see you in the next one.